There's a state in America where you pay less in property taxes annually than most people spend on their car insurance. And no, the houses aren't made of cardboard. While families in New Jersey are dropping nearly $9,000 a year just to keep their homes, people in another state are paying what you'd spend on a nice dinner. Some guy in Hawaii owns a house worth $875,000 and pays $2,385 in property taxes. Another person in Illinois owns a $280,000 house and pays over $5,000. The math isn't mathing, and that's exactly why you need to watch this. Stick around because by the time we hit number 1, you're going to pack your bags and move states. Number 10, Colorado. Colorado's effective property tax rate is 0.49%, which sounds boring until you realize what that actually means. The median home here costs $574,600, sixth highest in the entire country. Yet homeowners pay just $2,828 annually in property taxes. That's nearly $600 less than the national median, even though your house costs $200,000 more than average. Here's the thing nobody tells you. Colorado doesn't have low property taxes because it's desperate or broke. The state pulls in serious cash from other sources, so they don't need to squeeze homeowners like a tube of toothpaste. You get mountains, a booming tech scene, and a tax bill that won't ruin Christmas. But then there's the catch. Affording that $574,600 house in the first place requires either a tech salary or selling a kidney. And the property taxes, while low percentage-wise, still hit $236 monthly because the home values are insane. So yeah, you save compared to New Jersey, but you're still writing checks to live near people who own Patagonia vests and drink $8 oat milk lattes. Number 9, Utah. Tied at 0.49%, Utah's doing something most states can't pull off. The median home value sits at $545,200, and property taxes still average just $2,648 annually. That's $221 monthly, less than most car payments, and you're getting a house instead of something that depreciates faster than your motivation on a Monday morning. Tech companies are moving to Salt Lake City and Provo like they discovered the fountain of youth and cheap office space. Startups everywhere. Yet property taxes haven't moved. Most states would have seen this boom and immediately raised rates to cash in. Utah just kept things steady because they fund services through sales and income taxes instead. The downside is that unless you're really into outdoor recreation, large families, and conversations about the best hiking trails, Utah might feel like everyone's living a lifestyle magazine you didn't subscribe to. Also, the drivers here treat lane changes like surprise parties. Nobody signals, everyone just goes. And somehow it works until it doesn't. But financially, it's brilliant. Your property tax savings over 30 years could fund an entire second home, assuming you survive the freeway system long enough to enjoy it. Number 8, Delaware. Nobody wakes up dreaming about Delaware. It's not on vision boards, and Instagram influencers aren't tagging it in sunset posts. But here's what Delaware does have: a 0.47% property tax rate that translates to $1,750 annually on a median home worth $371,600. That's $146 monthly disappearing into escrow while your friends in other states are paying triple. The secret sauce is that Delaware ditched sales tax entirely, so the state makes money when you shop instead of when you own property. Genius move, honestly. You're also sandwiched between Philadelphia and Baltimore, close enough to commute for big paychecks without paying big city housing costs. The whole state takes about 2 hours to drive across, which means you're never far from anything, including the beach. Break down the savings, and it gets interesting fast. Compared to the national median property tax of $3,208, Delaware homeowners save $1,458 every single year. Stack that for 3 decades, and you're looking at $43,740 in your pocket instead of the county's. That's a down payment on investment property, a college fund that doesn't require selling organs, or finally buying that ridiculous espresso machine without guilt. Delaware won't make your friends jealous, but your accountant might actually smile during tax season. Number 7. Nevada. Someone in Nevada realized they could tax visitors instead of residents. And boy, what an effective move. The rate sits at 0.47% on a median home value of $455,500. Annual property taxes land at $2,143, which is $1,065 below what average Americans fork over. Monthly escrow? Just $179. Here's how it works. Millions of people flood Las Vegas every year to lose money on blackjack, pay $15 for watered-down cocktails, and convince themselves they'll definitely win it back on the next spin. Nevada collects casino taxes and tourism revenue, then uses that cash to fund schools, roads, and everything else without crushing homeowners. It's like having a rich cousin who never asks for gas money and occasionally pays your bills. Compare this to Connecticut, where the same home value would cost $562 monthly just in property taxes. That's a $383 difference every month, $4,596 annually, and $137,880 over 30 years. You could buy a second house with that savings. Number 6. Tennessee. People are flooding Tennessee like it's giving away free money. Population jumped over 20% in the last decade. Nashville's traffic now makes you nostalgic for literally anywhere else. And yet property taxes remain stuck at 0.45%, like the state forgot to check market conditions. Median home value sits at $332,600, and annual property taxes hit $1,488. That's $124 monthly, which is less than most people spend on food delivery apps they swore they'd stop using. No state income tax either, so your paycheck doesn't get gutted before it hits your account. Tennessee funds everything through sales taxes instead, meaning you pay when you buy stuff, but your housing costs stay predictable. Most states would have looked at this population boom, rubbed their hands together like cartoon villains, and raised property tax rates immediately. Tennessee just didn't. The rate's been hovering around 0.45% for years while demand explodes. Either they're very principled or very bad at capitalism. But either way, homeowners win. The math is stupid good. A comparable home in New Jersey would cost $493 monthly just for property taxes. That's a $369 difference every month. Over 30 years, Tennessee residents save $132,840 compared to Jersey. That's not rounding error money. That's change your retirement plan money. On the flip side, everyone who figured this out is already here, so good luck finding affordable housing in Nashville. Number 5. South Carolina. Just like Tennessee, South Carolina clock in at 0.45%, but the latter's median home value is lower at $299,500. Annual property taxes hit $1,337, which breaks down to $111 monthly. That's less than your internet bill, and you're getting an actual house instead of the ability to watch shows you'll never finish. South Carolina stays affordable because the state's cost of living is genuinely low across the board. You're not just saving on property taxes. Groceries cost less, gas is cheaper, and housing prices haven't gone completely insane yet. The state also offers substantial homestead exemptions that knock down your taxable value even further if you're a resident. Compare this to Illinois, where the effective rate hits 1.83%. On a $300,000 home, Illinois residents pay $5,490 annually versus South Carolina's $1,337. That's a $4,153 annual difference, or $124,590 over 30 years. You could literally buy a second home in South Carolina with what Illinois residents waste on property taxes. The weather's warmer too, assuming you can handle humidity that makes your hair revolt. Number 4, Arizona. Arizona ties Idaho at 0.43%, but Arizona's median home value sits at $400,000 to $26,000, while annual property taxes only hit $1,828. That's $152 monthly vanishing into escrow, while homeowners in high-tax states are paying triple for houses worth half as much. Arizona pulls this off despite being one of the fastest-growing states in America. Phoenix is exploding. Tucson's expanding. Retirees flood in every winter like clockwork. Yet property taxes stay low because Arizona generates revenue through transaction-based taxes instead of squeezing homeowners annually. The state also caps assessment increases, so even if your home value skyrockets, your property tax bill can't jump more than 5% annually. Number 3, Idaho. Idaho also sits at 0.43%, with a median home value of $446,400. Annual property taxes land at $1,912, which is $159 monthly. The state's become a magnet for people fleeing California, yet property taxes haven't budged even as demand explodes and home values climb. The state keeps taxes low through a combination of state budget surpluses and constitutional caps that limit how much local governments can increase property taxes annually. The state also offers generous homestead exemptions that reduce your taxable property value by $125,000 right off the top if you're a resident. That alone saves hundreds annually.